Good morning, everyone, and welcome. Thank you for joining us here for a beginning of 2014 journey together. My name is John Person, and I'm the creator and founder of Person's Planet. Trading Triggers University was brainstormed, something we created. I created the material probably over the last 30 years, and we put what I thought was an incredibly, just a great foundation of university studies for individual traders. The purpose for coming together every Monday for planning and scanning was designed to give insights to the tools that we use, number one, to help us derive the market condition. And what we did typically was to look at stocks and the stock indices. So for 2014, we're going to continue with that today and look at the overall market, the tools that we use for the different sectors and indexes. Next, I'm going to start with some seasonal buy and sells, some stocks that I think sectors that we may want to focus in on in the next few weeks, looking at a list of names that may give us some selling opportunity or at least a pause in the stock market advance, as well as stocks that had been beaten down last year and sectors that underperformed the overall market. Next, we're going to get a look at some day trade support and resistance levels in the most amazing markets for day trading there is, considering the fact that we have the four main stock indexes up here on our screen, and I'll just share with you what they are. First, on our upper left is the S&Ps. It's a 3-minute chart. Next is the NASDAQ, is a 3-minute chart. Next to that is the Dow, which is a 3-minute chart. Next to that, we have the Russell, another 3-minute chart. Underneath there, we have a 15-minute chart of the S&Ps, a 15-minute chart of the NASDAQ, a 15-minute chart of the YM or the Dow, and one of the Russell. Down below, we have the 60 minutes so that we can see what the overall trend of the 60-minute is, the relationship to price to the pivot point, person's indicator, as well as the person's moving averages here. Next, we have the NASDAQ, we have the YM, the Dow, and the Russell, all 60 minutes. Over here to your right as well, we have a 1-minute chart on crude oil, we have a 3-minute chart on the euro currency, and we have a 3-minute chart on gold. So we'll get into that in just a minute. We have already highlighted what I think are some important areas of interest. First off, we will talk about a lot of the support and resistance as we get into this next page that I'm going to go into, which will be our index AD lines. So where's the market money going to come from? Is the January swoon over? Typically, we see a little bit of profit taking in the marketplace towards the beginning of the year after we've had a stellar run-up in the market. And in this past season, obviously, we had an incredible run-up in the market. Now, looking at the advanced decline on the S&Ps last week, we saw a little breakdown. We're testing a little moving average. We saw some light volume, which is typical. On a weekly basis, though, the strength showed a little bit of divergence, but that won't even be confirmed, believe it or not, until the end of this week. First off, I'd like to see the market from a week-to-week basis. I think at the very least we're going to see some chop and some consolidation as we see more rotation, money coming out of perhaps some of the tech names. And it's interesting to note that last week it was the technology, by evidence of looking at the NASDAQ Composite Index. We saw more of a decline in the NASDAQ. So money was coming out of the NASDAQ, and the least decline of the markets was, believe it or not, the Dow. So the Dow held up the strongest. So the Dow has been kind of a leader for quite some time. And if you notice the relationship of the prices, if I'll expand these charts for you real quick. Notice where we are in price. Notice where the moving averages are on a weekly basis. Price is slightly well above that blue moving average. Now let's take a look at the NASDAQ. The NASDAQ is actually almost right on the moving average. So from a location of just examining price to moving averages, we see that the statement I made that there's more selling coming into NASDAQ-related or technology-related stocks is evident by looking at the relationship between price and the moving average. Next, looking at the Russell is pretty far away from its moving average, so small cap stocks remained relatively strong. And when we take a look at the Dow, as you can see here, on a week-to-week basis, the Dow held up relatively well. So we saw money coming out of technology. So let's get into real quickly some of the scanning and planning stocks and some of the sectors. So when we look at the NASDAQ 100, many people think technology is simply just the NASDAQ 100 comprised of tech names. And the fact is, it's also comprised of some of biotech. And that's one of the areas that we have seen, at least we come into a seasonal sell. So I wanted to quickly go over some of the names here from a perspective of what we might see more pressure to the downside. It could come from the form of biotech. So AMGN, let's take a look at Amgen, number one. What you have on your charts here is a monthly bar, you have a weekly bar, and we have a daily bar. And so when we take a look at this, we're kind of seeing that the market on a month-to-month basis, really, if you take a look at, and if I drop this alert page down here, we can see the dates. So when we take a look here, from the actual high that was made in April in Amgen, we really didn't accelerate. I mean, quite frankly, if you look at this, we are actually lower than the April high trading right now. So it is showing that this market did not, or this stock actually did not conform with the overall marketplace, in that it's starting to lose its momentum to the upside. I would gather to say that this stock here, even though we're in a weekly buy, as you can see from the PPS buy signal right there, that's that green arrow pointing up, or triangle, we're in a PPS buy signal. The rally that we've seen has been on some fairly, this little, I guess you want to call this a little rally right in here, has been on very light volume. In fact, the market actually, if you take a closer look, looking at on-balance volume, the volume has been going down, not up. It's more of a distribution rather than accumulation of positions. So that's just one stock. So Amgen's telling me that that sector's a little bit tired. There is a little bit of profit taking, or a cause for a pause in that marketplace. I would also submit to you that if we get a daily close, I want you to look at this carefully, a daily close underneath this low right here. And so this particular week was October 18th. It's a last conditional change. It's the low of the market. Every time the market's come near that level, it's sprung back. It came right down to that same low, as you see right here, and sprung back. So if we get a rollover, and possibly we get resistance at around 116, if this market starts to roll over on the shorter term time frames, and all of a sudden starts to break what we see as this 113 level of support in Amgen, then I suspect that we're going to not only come back down and test 109 one more time, but 109 gets taken out, you're going to start to see this market get back down closer to the 100 mark or lower, possibly even the 95. From a seasonal perspective, is one that Amgen typically sees some type of weakness going into the first part of the year. Next to Amgen, we have Biogen. And Biogen, we had a weekly low close doji. It hasn't dropped. We've got a weekly sell signal. It hasn't dropped. The funny thing about this market is actually forming more of a wedge formation. So when I look at a stock or a sector, I don't want to look at healthy names. I want to look at multiple names that show weakness. So I understand that each different companies, they're fairly different, but if the sector is going to be weak, we want confirmation that more than one name in that sector has bearish tones to it, bearish patterns, bearish chart formations. So if we do see a breakdown below this last swing low in Biogen, which, as you can see at the chart, is 270, and I'm going to mark that right here, and I'm going to set alerts for this myself. So I'm just going to do it quickly. Add alert, price alert, and I want, if the price gets down to 270, and I want to show that on a chart. I'm going to go actually 270.52. This is an alert. This tells me, give me a pop-up message. And so therefore, I have an alert set in the marketplace at just below that or near when the market gets near that level. So that way it tells me, hey, if we trade below 270 and we drop just a quick $7, I want to look at the condition of this market, because even though we have this kind of like wedge formation, as you can see here, we have a huge gap below the market, and the market can return to trend, which, as you can see, this would offer probably a nice little potential short-term trade. The next question is it optionable? And so if you're looking at a decent trade, I think Biogen, it does have, by the way, weekly options listed, all right? So it has weekly options. Biogen is actually one that has some fairly decent open interest. The put side in the January expiration isn't all that heavy as far as open interest is concerned. There's a lot more open interest on the call side. But when we take a look at a $270 stocks, you're gonna probably get more interest now with the weekly options than you would with a longer duration option. Looking at February, going out with 46 days, I'm trying to set myself up for potential trades that I think will give us, when we get that little breakdown, I think a quick pop to the upside. I got two ways to play it. I can start looking at a put option, or I can do one of my favorites. In this particular case, I would look for some type of an option expiration, weekly short call, or a call spread. So anyway, I've got 270 set there for Biogen. The next stock I want to get into is Celgene, C-E-L-G, and take a look at Celgene real quick together. Celgene, it's, as you can see, what's really, like I just mentioned, I want to see stocks that are kind of giving me more bearish tones of the market. We've seen a little rally in the marketplace, and as you can see, we've seen significant price strides to the upside in this stock. It's been just absolutely hyperbolic, and it's starting to lose a little bit of momentum, both on the monthly basis. Looking at on-balance volume, it's starting to peter out. They're not finding as many buyers up here at 169 as they were, say, closer to $80, right? And looking at the weekly on-balance volume, as this market has surged ahead since October to the upside, it's not joined any strong weekly volume analysis. But for me to get really ultimately bearish, look at this low right in here. We had a snapback down to that monthly pivot, and I need to see this market either generate a more defined daily sell signal, an M-top formation, or I need to see a low close doji on a weekly, which is interesting because we do have a doji, so I need to watch the low below on a close of Friday below 166.04, that level right there. So I'll be watching this. This is on my list, which I have already written this down, okay? So we have in the spirits section, I want to say, looking at biotech, we also have an interesting setup with some of the healthcare names. So some healthcare names, and I'm going to get through this list real quick. Number one, in the healthcare equipment sector, C.R. Baird and Company. Look, we're in a weekly sell. We have a lower area of volume starting to come in, and we're starting to see more aggressive lower highs and lower lows. We have a gap down here in the market around 128. We have another gap around 123. Look at the daily volume. I would like to see this market break down We've got support around 129. I think this is another name that might give us a push all the way back down into the 120. I know it's only an $11 move from here, but it might give sometimes a little bit more than we think. Because when we take a look at the healthcare, especially names in this space, remember, ISRIG has just gotten its life handed to it. And I think when we take a look at, besides that, look at LH, we take a look at some of the healthcare names. We're starting to see a lot of healthcare names show that what I'm looking for, the prominence of bearish formations. One other one is DGX. You take a look at Quest Diagnostics. It has that same component. They've been liquidating this name. So it's kind of like a checklist. If all of a sudden you start to see some names start to get that are not really related, but there are same stocks in the same, or same stocks in a certain sector, and they start to fall apart, it gives me a little bit boost of confidence that I want to start focusing in on stocks that haven't gotten attacked yet or sold off, and start setting up my ideas of trade strategies for those. And so looking at the healthcare and the biotech, we are seeing weakness. That's where we're getting that sell-off in the NASDAQ 100. Let's go over and take a quick look at one of my all-time favorite companies. In 2009, I was over in Paris, and I made everyone aware that Starbucks had opened up a store in Champs-Élysées and on Saint-Honoré, Rue de Saint-Honoré, and it wasn't Americans that were over there drinking Starbucks. It was French who had embraced and accepted it. And the stock was trading around $8.50, and I told everyone that I knew, including people in this trading room, my friend Tom Sosnoff, I said, hey, you got to get into this stock. It's at $8.50, 8.5. I think Bank America was another name that was around $3.50. I was very bullish at that point in time. But now, I just want you to know when I come up with this next statement, when I have a monthly low close doji in a Starbucks, a weekly low close doji in Starbucks, volume is starting to peter out. I kind of get a little bit nervous. And so from being bullish way back here on a high close doji, I think, I have to say I would be very cautious of this name, and at the very least, it's due for maybe a multiple week decline. So on any further strength, I think you have a very low risk situation in Starbucks. At least, as you can see, from 76, if we pop back up to maybe 78, 80, somewhere up near the PIPA resistance, I'd be looking at more bearish opportunities for Starbucks. I'm very cautious on Starbucks, not only based on longer term, intermediate, weekly charts, and even taking a look at daily charts. Folks, look at this potential. And I don't know, anyone that looks at a chart might start to see, boy, this looks like the inverse of a cup and handle, or a shoulder, head, shoulder formation, and that here's a neckline that might be brewing, so to speak, no pun intended. So if we do get back up and test, upper close to the pivot around 78, I'd be looking at a very, I'm pretty adamant about looking at a bearish position right there, some type of a credit call spread on Starbucks. At the very least, I don't think that this market's getting ready for an aggressive move to the upside. The volume indication says that there's been some heavy liquidation going on in the market, is very prevalent right here on the daily numbers. Okay, so there we have some names. Next, a lot of people drink over the holidays, and once the holidays are past, we start to make amends. People start to sober up. People don't, they tend to give up a little bit, party less, get back to work. So perhaps we have spirits and the booze manufacturers start to slow down. After all, this is Constellation, STZ. We take a look at the names, STZ. Let's take a look at Jim Beam, B-E-A-M. Same type of analysis. Weaker volume here. These are names that I think we need to be paying attention to. One more here just to throw up there, ROX. This one, look at these long shadows. That's kind of a, ROX is a dollar stock. We're going to get out of this one. But let's take a look at SAMs. Many of you know Sam Adams. And Sam Adams, I mean, wow, that was a heck of a move from 25. I mean, this stock certainly is one that shows that there could be some room to the downside or profit taking in the marketplace. Unfortunately, Sam is not a great option trade. STZ is, so you want to pay more closer attention to Constellation. As far as the beverages, Constellation's not, STZ is not one of the greatest stocks to short, but let me get that back up here for you guys. I think it does cause concern that we saw this doji and we have this huge spike of seasonality only to peter out at the beginning of the year. So at the very least, if implied volatility on the February options is at 25%, the 52-week high, it's on the low side. So if anything, there's not really a lot to do in that sector other than say there is some seasonality, and maybe use this information to understand that there's going to be some sector rotation out of certain names. So looking at healthcare, biotech, some of the beverages in that area, beverages including both booze and coffee, might be under pressure in the next coming weeks. Last but not least is insurers. Allstate is another one. Allstate starting to form more of a distribution top. We want to see a little bit more follow through this Friday if it does close closer to its lows. Allstate is another one that I think, looking at all the insurers which had an amazing year last year, Allstate's not, it's not a great option candidate. It does have some decent open interest, 3,000 on the slightly out of the money 50 puts in January. So just to let you know, Allstate, looking at other names like Chubb, almost the same similar pattern. Do you see what I'm showing you here? So it's not just one stock. We take a look at another diversified insurer, Metropolitan Life. So we're starting to see a breakdown, newer highs in the weekly chart on lower volume. So this is an area that if there is going to be some profit taking or if there's going to be a slight pause in a market, we got insurers, biotech, healthcare, spirits, and that's some of the sectors that we're looking at. All right. So what about some of the strong stuff? Well, the stuff that this year we might see. I mentioned this last year before we took off for a break, is some of the real estate investment trusts, the REITs. Here's a name, AIV. It's just slightly unchanged on the year. It was almost at its 52-week low. The volume, notice that as it was declining, it didn't go anywhere on negative volume. So the real estate investment, if the things are going to turn around, perhaps we start to see a seasonal turn in some of these markets. And boy, I'll tell you what, real estate investment trusts, it's not the sexiest play, but I'm starting to see not one, but a bunch of names, and I'm going to rip through them right now. AIV is one. HCN is two. Again, a negative move to the downside this year. These are specialized REITs. HCN, healthcare. It's in the healthcare component. It's already gone down significantly. Monthly is not all that, the monthly volume doesn't really suggest that it's totally dried up. So we want to look for maybe a pop over this last swing high of around 54, and I've already set an alert for that for our trading room. I think that this is a good name that we could start to look at. EQR is another name in the real estate investment trust. This could be a longer term wedge formation. It's gone down on no volume. It's kind of a sleeper. It's kind of like looking at Siemens. I gave this example out because that's when markets move. Siemens had this like long duration sideways for just didn't do anything for multiple years, and all of a sudden out of nowhere starting in July, August, and in September, this thing just, you know, Siemens has just continuously popped to the upside. So again, it's the pattern that I like to see, this consolidation pattern. This is what I'm showing, whether it's a 5-minute chart, a 10-minute chart, a daily chart, a monthly chart, that bull flag formation and the breakout with volume. Those are the three considerations that I like to see in a market that gives me confidence to go with a trade. Now, these are some of the positions that I would say that have a shot this year of making bigger moves. Also, looking at some of the home builders. You know, not many people want to really get into the home builders, but Lennar had a monthly high close doji. I would say a pullback to maybe 37, hopefully to, you know, to the 35, 75, somewhere in that zone. If you get a pullback in Lennar, you could start taking a look at the toll at this stock as well as Toll Brothers, and I'm going to get to that in a second. Volume is very strong. Look at this. Volume broke out to new highs, but the stock hasn't yet. That, folks, is very positive. So there's one for the masses. Also, we take a look at, like I promised, Toll Brothers real quick. Oops, wrong symbol. All right, so Toll Brothers, you know, it's not as strong, but it did break out. And I'm going to tell you something. If you take a look at this, these old highs, it broke out of those old highs, and it has a gap there. So over the next couple weeks, if we pull back down, breaks out of resistance, resistance becomes support, you want to be looking at a buyer down near that 35 to the weekly moving averages near 34. It's a very strong possibility we could see that pullback in the marketplace. Seasonally, it does go up into approximately mid-March. So if we get a quick early month January sell-off, we have strong potential there for this name. Also, semiconductors, TER, Teradyne. Teradyne is a stock that it also has that very similar volume pattern. They are accumulating TER like there's no tomorrow. The stock is on a rise, I get that, but it hasn't broken out to make new highs yet. And if people think that the semiconductors is the component, it's not the component that's causing weakness in the NASDAQ 100. As I've shared with you, it's more the biotech that's showing the weakness in the NASDAQ 100. And looking at this particular name, you still see seasonal strength going into the end of February. So Teradyne's a kind of a low-risk stock. I would hope to see a pullback to like 17, 18, something like that. If we get a little pullback here, 17, 20, notice that we did see a little bit of a breakout. So we have that breakout of the market. So hopefully we get a pullback, maybe at 1730. That would be a name that might be worthy of looking at. And when I take a look at names in this space, I also want to say, well, how does other names? And I guess the more popular name would be an Intel. AMD is another chip manufacturer. And those names are starting to look and come alive as well. I mean, look, if AMD, I mean, folks, if you take a look at a potential flag formation, I mean, here it is, right? So the only component that's missing is that volume. But on the monthly chart, it's starting to break out. So if this stock gets above the high of 412 area, I say this thing's got, you know, it's got some significant room to the upside. So there's some semiconductor names for us. In retail space, you know, interesting, let's take a look at some of the retail stocks. And I know we only got another minute to go here. All right, so here we go. Macy's. From a seasonal perspective, Macy's really doesn't go anywhere until the end of January. Look at that seasonal strength that I'm sharing with you that goes into May, and it's already moved. So Macy's, I think, has been overplayed for this time period. But I got a name for you, and I think this is one, Stage Stores, which is the parent company of Bell's department store. I'm not impressed with the weekly volume, but the market's been down. It had this shoulder, head, shoulder. It broke the neckline. And here's the problem that I have with this name. It broke the neckline, as you can see. And what it's done, so here's the neckline. Right there, right there. It came back up, tested the neckline, and it might bail. I need volume to get into this. But what I would suggest that if we do, and this is my suggestion here, if we break out of this 24 handle, all right, then it breaks above the neckline, right? It breaks out above this consolidation level, and then it doesn't become anymore a head and shoulders. It becomes more of a continuation to the upside pattern. The fact is also, it starts a seasonally strong period of time at the end of January in 20 days, a very strong seasonal. So I have to say, I don't want to get fooled in the fact that this might be a head and shoulders formation as much as I want to think that this could be at least a continuation pattern. Also, this is one that everyone's going to hate me for, J.C. Penney's. J.C. Penney's is the one stock that I think they're not going to, unless they file bankruptcy, I think it's a possibility that by April, May, and believe it or not, this is a long shot. And I hate to give you guys long shots, but I think J.C. Penney, a long shot here, would not be looking at weeklies. And I know you're going to kill me because I never make these recommendations, and any option theorist would say, John, you're out of your mind, don't do it. But I think that J.C. Penney is worthy of a minimum move. Minimum, check this out now. I think a minimum move, this stock is worthy of getting back up to near this $13.50, $14 old level of support, which may turn into resistance. Want to watch for an upside swing. If it takes out this high of 1030, if it takes out the high from November 29th, if it gets this move up here, I got news for you. This little swing high, if it takes that swing high out, this thing has room to run because there's a lot of short interest in this market, and it has a lot of open interest, believe it or not, in the May option. So if we take out 10 and we can go to 14, I mean, looking at right now, and I know, don't kill me now, but some, I would look at for the next 30 days, give it another couple days here, watch to see the price action. But I think looking at like $13 calls for like, 32, 34 cents, 13, it's out of the money. I get that. I know I'm buying out of the money options. I know I'm not buying a high delta. I understand that. But I think in this case, last year I had a very similar case in Best Buy. I know we have some students in here that remember when I was all high and mighty on Best Buy. You guys remember that, Best Buy? And I said, hey, there's a gap in Best Buy. And lo and behold, not only did we fill the gap, it was Best Buy, we also had it moved a lot further than I ever thought. Another one was SHLD, Sears. That was another one that we had pegged dead to rights. And Sears is another name that actually, if you notice, it doesn't even start to move until the beginning of January. It's in a seasonal downturn. So Sears, JCPenney, these names, these department stores, this is now the time to buy, not the time before the holidays, as a lot of people in the media were talking about. So Sears got beaten up into the end of the year. If it almost was negative on the year, didn't quite meet the criteria of my dog stock. But I think the fact from a seasonal perspective, if Sears gets back above this 49.80 area, $50, with a PPS buy signal and an upturn, it's got, if you notice here, it's got a gap in the charts. And so we might be seeing the sector. So we want to look for stocks in the sector that are in a seasonally strong period that start demonstrating strength, because one will follow the other. And I think JCPenney's is the lowest risk trade out there. It would be a surprise to the world, right? And so anyway, there's some of the names that I wanted to go over with you guys, and just to give you some names. One other name I want to talk about is diversification, is in integrated telecom services. CenturyLink, it's one that also was negative on the year, significantly negative on the year. Look at this, the stock symbol is CTL. This is another one that's on my list for the year. Strong down move for the year, but on relatively no volume. So they sold this thing on no volume. In fact, look at this. This is like a straight down price, and this is kind of like a straight up volume. So they're accumulating this stock. So you want to pay attention to this name. We get a pop in this name over above this swing high of 32.40. I don't want to buy it on picking the bottom. I don't want to buy this thing on strength. If it starts to move above that 32.36, bang, I want to go with this thing because, man, if you were trading the volume, it looks a lot prettier than trading the price, doesn't it? So there's another name that I think I was excited to give this one to you. And I mean, I got a couple more, and I just, in that space, here's a name very similar. Stock is down in price, almost negative. It was negative on the year last week, right? And as you can tell, the market hasn't really gone anywhere sideways, but look at this on-balance volume straight up. It's JDS Uniphase. JDS Uniphase. Is this the year for JDS Uniphase? Well, I can certainly say it's kind of a low-risk trade, that's for sure. From a perspective of what's not participated with the market, it got sold off for potentially for tax loss selling, and now they're probably bidding it up as we can start to see a move that goes into, believe it or not, the end of February. So we could see an upside in JDS. So these are some names that I think, some sectors and names, not to mention the materials, like I think this is one that everyone's seen and wondered why it hasn't moved. And it's one of those names that, boy, when it does break out, it is, and it's starting to, because it just generated a monthly high close doji, a monthly PPS buy signal. They sold this thing off. It didn't really go anywhere. And look at this little wedge formation. So we could actually see if it pulls back closer to these lows in here, or these highs, I mean, and acts as support, we could see a continuation to the upside. The name of this company is Caterpillar. You want to watch Caterpillar and the material sector. So there was some great names that we wanted to talk about. Seasonal sells, where's the weakness in the market coming from, and as well go over and discuss what strategies you can employ, what charts, or at least what stocks have options to focus in on, okay? So that was my main goal starting off today, was to get us into what seasonal buys are there. And I think one of the other, I have this list in front of me, like I said. Here's a piece of paper. I'm setting these alerts. We'll go over and review this again in next week's planning and scanning. Also, check this out. If the weather is bad, people, Netflix obviously are going to rent money, but this is a name that got a little respect. Electronic Arts, EA. It is not negative on the year, but the market sold off, and it hasn't sold off on any volume. And it did pop on my radar screen for several different reasons. At the end of the month, it has a seasonally strong period of time. It has a high close doji on a weekly basis. This is a name, and long shadow in here. This is a name that I think, if we also, looking at this chart, Electronic Arts is another name that I think will come, if it pops over, look at this area of old resistance support, which is around 24 bucks. If this thing starts to pop, you've got at least a move back to testing a breakout of 24. I would suspect, we could get into like the 26 to 25 and a half level. I'll be looking for that myself. All right, so that covers that aspect of planning and scanning, and this is a little bit highlighted additional session, because I also wanted to go through some trading setups. And let me get to my main page here. For day trading purposes, we've got at least a move in the Dow, and I think right now what I wanted to go through as we discuss more of this session with planning and scanning, and we get this recording underway, and I know we're 9 minutes over. But looking at where the market's given us on a daily chart in the Dow, remember we talked about the strength. The volume's not really appreciating. I got resistance overhead in all the markets here from the PIPA. Someone asked me, what's PIPA? It's a pivot point moving average. It's the 3-period pivot point moving average that we created in wrote about, 10, 12, 15 years ago, whenever it was. And so what we like to see here is that the Dow, and we've got a kind of a situation that on this 15-minute chart, or as we go through the first 10 minutes of the market. A lot of little shadows, a lot of shadows coming into the marketplace. And the 60-minute, as you can see here, the 60-minute, this chart here, has been in a buy mode. And I think that, you got two ways of playing the market for today, all right? And what I'm looking at is we hit near the resistance, daily predicted resistance. That's that red line, all right? So we have a situation where we start to break, and what I like to do is to see if all the stock indices are in sync together. So if they all generate 60-minute sell signals, or they all generate 15-minute sell signals at the same time, then I'm going to be looking for snapbacks to the moving averages to sell short. Looking at crude oil today. All right, so crude oil, it's kind of a tough market because it has had this huge run-up, and in just 2 trading days, it took what took a month to do, took 2 days to take away. We are just hovering right at the first test of monthly pivot support. The market's got its eyes, though, on 92 and potentially lower. So you might see a chance for a pause to digest these 3-day down move. The seasonal tendency for crude oil is to weaken during this time period. People drive less, they're more hunkered down. But I think what you're going to see is more of a consolidation move, getting a chance for these moving averages to move down to prices. But that doesn't mean to say that you're not going to see a spike to the upside and at least a challenge to get back to maybe the 95.30, which would be about $1.20, 90 cent to $1.20 move to the upside here. So there's a lot of space, open free territory. I would look for pops above 94, and I'm not going to be looking at buying this thing until we get above this last swing high, which is above the daily pivot, and then give me a chance to get some opportunity as it tests back up into this zone. So you want to watch for 94.60 today in crude oil. You want to write that number down. 94.60 in crude oil gives you more of a buy setup for a short-term squeeze pop to the upside. Okay. So next market I wanted to talk about was gold, which already kind of started its ascent. I had this market, if we popped over this 1242 area, we could see we broke down and we have that wedge formation that I'm so fond of. And if you notice here, the gold market, it did break, and I talked about this last week with folks over at TradeStation. This is a last conditional change candle. Notice that this candle, once we took out that high of this candle, because this is the candle that the market made a new closing low below prior lows. So the high of that candle, it took out that high, and now it has room to run to the upside. That was 1226. Now I'm looking for breakouts above that those last conditional changes, because in a downtrend, you break out to the upside, guess what? It gives you a reversal formation, a reversal pattern. Combine that with the fact that we have the market generated a 60-minute sell signal, snap back to the moving averages. You take out a swing high. Folks, I think the next test, we got 1250, 1251 to the upside in the gold market. All right, so now let's go over here to our trading room. All right, so what I have up here, when I wrote in PIPA and daily moving averages on the S&Ps, this was a very strong area of resistance in the marketplace. All right, notice what we are now seeing. We have a 60-minute, and it's not going to conclude for another 16 minutes, but every single index, and this was an area of support which we've just violated. So in the NASDAQ, I put in these in the pre-session, and I was typing this information up for you guys. I think in the S&Ps, you generate that 60-minute sell signal, the NASDAQ forming more weakness. And again, the NASDAQ is the weakest of the link. We just went over that with our AD lines. We just went over that with the pricing structure. We went over that with the effect of the biotech sector, right? So now we've got the Russell coming in and also reversing its strength, but it's still holding up its, let's say, overnight session lows. So we get this 60-minute sell signal, then we can look for snapbacks against that hourly moving average. Stochastics, look at all stochastics on the 60 minutes. They're all overbought at this level. So don't freak out and chase this market. We have an opportunity, and I think over the next, today into tomorrow, one thing that I want to say here is that just like we saw with the NASDAQ, do you see this level of support in the SPOOs? 1, 2, 3, 4. Anyone that's been buying thinking that this is the week the stock market's blowing off to the top, that's been buying the market into this area of support, they may, once we give and give that support up, it's like going to the well one too many times is my old phrase. You keep buying support, it goes up. Buying support, it goes up. Buying support, and all of a sudden, if it breaks that support, that's where I've got here and typed in. It's a breakdown of support would be a stop in. So if we're in a 60-minute generated sell signal number 1, I would be looking at if the market gave a sell signal, didn't snap back, then I'd be looking at stopping myself in on the momentum of the downside of that market, okay? So I think that the fact is that the overall equity market, or S&Ps this week, it has the capability, and I'll go back to my pages here and see if this, hopefully this information helps you out, giving you correct support and resistance levels. So let me go over here to my multiple time, and we'll conclude our session here with this. I think the S&P is very capable of this week of reaching lo and behold, here's the S&Ps, all right? We have a low close doji, a daily sell signal, and if we take out that level of support that I just lined up for you guys, you're in a daily sell, you get in a 60-minute sell, you take out that level of support. Folks, I think it's the next level of interest is going to be these old highs, 1806, 1808 number, right? Somewhere that's not that uncommon. So between the monthly pivot of 15 and this 08 number is it's within reasonable expectations of what to expect to the downside. So that's just looking at the market from a technical perspective and a broad view of what stocks we want to look at. I wanted to start with a very positive, and I hope today's information gave you a look-see, at least something different than Tesla and Facebook and all the other high flyers that everyone's kind of looking at. But I wanted to also start off the year on a very positive message and let you know that trading is about having positive emotions, being positive, having that positive attitude. It's going to boost your critical thinking skills. Remember this, a positive attitude is going to boost your critical thinking skills, and ultimately you're going to see more possibilities. And so when you look for opportunities, and don't fret, don't worry, don't have that negative emotion as fear that you missed a trade and worry that you're not making money today. Be positive and look for other opportunities. These are the things that you're going to come, and when the market gives you those opportunities, you'll be able to see them by having that positive framework of mind. I want to say thank you, Luis Lozano. Notice you typed in, what the heck, a sub-dollar stock. And notice how fast I took it off. I ran a scan for you guys. I ran a scan, and I was looking at the names in that sector. It's not just that I wouldn't trade that stock. I wanted to see if it, too, is seeing negative performance. More names in a sector that have negative chart patterns tell me that it's not just exclusive to one or two names they're selling, but the entire sector. That was the message that I hope you walked away with there, Luis. And very, very nice of you. Thank you for your contribution, though, because you really helped clear that up for a lot of people. So I want to thank you guys very much for that. Okay, that concludes our session for today. Our planning and scanning that's kicked off the 2014 year with a lot of great information and food for thought. So thank you very much, everybody.